What is going on, everybody? Welcome back to the Daily Stack Report. If you stack gold or silver, or you're thinking about it, hit subscribe because we cover the metals daily with market moves that are crazy right now. We're all over them. We check the premiums and what's happening in the physical world. Guys and gals, today is January 28th, 2026, and this was one of those days that reminds you precious metals don't move like normal markets. Okay, guys, today we saw all-time highs again, and the real story isn't just the highs, it's the speed. Silver ripped to extreme levels and then snapped back hard. You can feel the market trading emotionally right now. Momentum, fear, FOMO, all at once. Okay, guys. When silver is swinging like that, it tells you something important. Liquidity is thinner than people think, and positioning is crowded. Now here's the key. Different quote feeds can show slightly different prints depending on venue and timestamp, but the trend is the same everywhere. Gold and silver are in historic melt-ups. Reuters described the gold racing to fresh record levels, silver hitting record highs as investor demand surge. Alright, so why did gold and silver move today? Reuters tied today's gold strength to the market wanting safety and geopolitical tension, policy uncertainty, and strong demand that's been building. When gold starts behaving like a default safety asset, it doesn't need a single headline. It needs an environment where people don't trust paper promises as much. Number two, the dollar narrative matters a lot. Reuters also reported that the U.S. dollar weakening as one of the drivers for gold surging. The U.S. dollar has seen a record low this month, guys. It is dropping and dropping, and we're not doing anything to protect it. Gold is priced in dollars, so when the dollar gets softer, gold can look cheaper globally, and demand can surge fast. And number three, silver isn't just a mini gold. Silver moves like a hybrid, part monetary metal, part industrial metal, and that means it can overshoot hard. MarketWatch recently framed silver's $100 breakout as something that can come with serious volatility, including daily swings. So guys, be careful out there. Now let's talk like adults for a second. Spot versus futures. Spot is the right now price for metal. Futures are contracts for delivery later, and they reflect expectationing, positioning, and leverage. So combine all three of those, and that's what you get your futures price with. On big momentum days, futures can look like they're leading and spot follows until physical tightness or dealer hedging pulls things back. That's why you can see fast spikes and dumps, especially in silver. Not so much gold, but especially silver, guys. And here's the important part for stackers. Even if the paper price whips around, the physical market doesn't always follow tick for tick. Physical moves in steps and premiums can stay elevated even after price dips. So guys, thank you for listening to that. If you haven't already, hit that subscribe button, guys. It really helps the channel. Trying to get this page to 100 subscribers. The path to 100, guys. We're at like 18 right now. But back to the knowledge. What APMEX is charging right now, premiums, reality check. Let's get into the real world pricing people actually pay, i.e. when you go to your local coin shop, your LCS, this is probably what you're going to be paying. So check out and be on the lookout for this. APMEX is listing the 2026 1-ounce silver eagle around $116.90 today. That's for check and wire, so no credit card. Credit card's a little bit more than that. That's your headline coin, and in hot markets, eagles become the poster child for premiums. Generic 1-ounce silver rounds. APMEX has 1-ounce APMEX branded silver rounds for around $113.40, and they explicitly show it as low as 9.49 per round over spot. That line matters because it proves something. Even when spot is ripping, the premium structure is still there, and dealers are widening and adjusting based on demand and hedging risk. So guys, on big market days like this, you can expect premiums to go up because dealers are having to pay more to obtain the silver, and if something happens like the other day where we see a huge $16 intraday price swing, they have to recover that. So be on the lookout for that. As we spoke earlier, gold is on a historic run. So for gold, APMEX has 1-ounce golden eagles for around $5,500 on their listing. So if you're watching gold at $5,500, but your gold eagle is around $5,600, depending on product and availability. That's the difference between what the market is quoting for raw metal and what the retail market is quoting for a highly desired government coin. So guys, are you buying eagles right now, or are you going generic rounds bars, or are you going towards 90% silver? Drop a comment, let me know what you think. Currently, I do believe that 90% silver is very underpriced and undervalued. I know refineries aren't taking them, but guys, that's going to calm down. At some point, it's going to calm down. Refineries want them. That's how they get paid, right? They don't want to not get paid. And I'm sure refineries make more money on 90% than they do the pure silver itself. So it's just a matter of time until that catches up. So right now, I'm no financial advisor, but that's what I'm purchasing. And I'm playing those premiums and taking the profits and putting them into 0.999 silver. All right, guys, let's hit the gold to silver ratio real quick. The ratio is simple. Just in case this is your first time, the ratio is gold spot divided by silver spot. When the ratio drops, it means silver is outperforming, and when it raises, it means gold is outperforming. You mentioned that today the ratio was in the high 40s, and so that's typically where we're going to see it right around now, sitting around 47. And when the ratio compresses quickly, it can signal speculative conditions, but it can also reflect a genuine repricing of silver scarcity and demand. Let's take the temperature of the crowd for a short second, because crowd psychology drives short-term moves. On Wall Street silver, people are literally debating which milestone it hits first. Are we going to see $6,000 gold or $200 silver first? Let me know what you think. Because even when the paper market is volatile, the physical market often trades like, yeah, we believe higher prices are possible. And guys, everybody does. I personally think we're going to see $150 silver here pretty soon. But what do I know? I'm just some guy on the internet. Now, I'll say this carefully. Forums can be hype heavy, but they're still useful as a sentiment gauge. So guys, be careful. Don't always buy into the FOMO. Don't buy just because you saw some guy on the internet tell you to go buy and he thinks the price is going to go higher, because just like we saw the other day, the price can go down very, very quickly. And just for a reference, today I was going in to sell some 90% silver that I previously purchased around $45 per face value. When I went in this morning, when silver was around 110, they were paying 65x face value. And later in the day, literally a couple hours, silver had gone up to 117. So I said, hey, you know what? Let me go in, sell some more. I have a bunch of it. Maybe I can get 67 times face, maybe 68. Let's see what we can do. And guys, I got 60. That's right. They dropped $5 per face value on me just like that, because the refinery sent out an email to them saying that they weren't buying it as much. So guys, be careful. I mean, even when the price goes up, things like that can go down. So always be careful. All right, guys. Goldman Sachs raises year-end gold forecast to around 5,500, driven by demand dynamics. That matters because it adds institutional permission for big money to stay bullish. Silver's volatility is the headline. MarketWatch emphasized that big upside can come in violent swings. So if you're stacking, your edge is mindset. You're not trying to day trade your stack. You're trying to build a position through the chaos. So guys, do you think silver's next move is to 120, or do you think we get a bigger shakeout first? We almost hit it today. We were around 119. Almost hit that 120, but not quite yet. But I want to hear what you guys think in the comments. Are we hitting 120 by the end of the week, by next week, the week after? Let me know what you think. We have gone from 95 to 118, 119 really fast. So a pullback can come whenever we have fast movements like that. But this market is irrational. It doesn't care about hype. It doesn't care about what's rational. It doesn't care about anything else other than shooting up. And guys, it's been a crazy ride. It's been a crazy start to the year. It was a crazy end to the year. But guys, that's all I got for today, January 28th, 2026. If you want precious metals coverage with spot physical premiums and real narrative behind the move, subscribe to the Daily Stack Report, guys, because you know I bring it to you every single day, good or bad. And hey guys, stay safe out there, stack smart, and I'll see you tomorrow.